Non-U.S. markets measured as the EFA index are at a 20-year valuation low versus the U.S. market, so there are plenty of opportunities abroad.
And European banks top that list for you. It feels, I guess we say this every time you've come on, a bold call. And indeed, if you look at Deutsche Bank, for example, they have continued lower throughout the time you've called for this sector.
Well, we wouldn't buy them all, but there are some with very committed managements working tirelessly to streamline their businesses, like UniCredit in Italy and Barclays in the UK. But it's a tough slog with rates so low in Europe. But ultimately, capacity has to come out of the banking system, and it will, because there's no other way the banks could then lend and offer credit up to economies that need it.
I mean, what about the idea, Sarah, and I've heard this from a lot of especially bullish fund managers, that the U.S. is the global safe haven right now. Our stock market, our dollar, that's where the money's flowing, because we're feeling this global slowdown less than everybody else. Why do you want to be outside the U.S.?
Well, that's sort of analogous to this idea outside the U.S. that defensives, economically defensive stocks are safe havens. Safe havens, you have to pay a lot for safety. We're not willing to pay 27 times earnings for European beverages, for example. They're the same stocks they always were, just more expensive. And I'd say the same is true with the U.S. market in aggregate. It's an expensive market relative to the affordability of non-U.S., but you have to be willing to take some risk. And the economies outside the U.S. are not looking as robust in general, especially Europe and Japan, that make up the large part of the developed world. But within that are some fantastic businesses. For example, in industrial automation and robotics, like ABB, listed in Switzerland, or it's a competitor, another large market share company in robotics in Japan called Fanuc. They're both cheaper than they've been in a very long time, and this trade war has brought the stocks into a value buying range, which is exactly what we're paid to do. Our clients ask us to upgrade. They want us to make sure we get a lot of great quality companies in the portfolio when others are pessimistic.